Good afternoon, everybody, and welcome to week 3 of our remote learning and our lesson 1 today for 10 Commerce, where we continue to look at accounting, and we move on today to look at the Excel spreadsheet and the functions of the Excel spreadsheet, which it will form the basis of our studies for the rest of this term. Before we get into the main part of this lesson, just to go over some accounting terminology again, remember right from the start of this term, we looked at accounting, what it is, the process of collecting, recording and interpreting financial data to determine the financial performance of a business at a point in time. What we're going to do today is we're going to look at a couple of additional points as well that we can start looking at, because we may come across these transactions, or we will come across these transactions as we start looking at our Excel spreadsheet and the different journals that are contained within that spreadsheet. So if we have a look at additional capital, so when a business or an owner starts up a business, he's going to incur expenses which he needs to pay for. And because he is starting the business from scratch, he probably does not have money within an account to pay for expenses to set the business up. So what he does is he contributes capital or puts his own money into the business, into the bank account, to allow the business to then purchase assets to establish the business. For example, a motor vehicle, or it could be money, it could be equipment, other forms of assets which the business is going to need. Conversely, as the business is up and running and it is making sales and earning income, which will end up as cash in the bank account, the owner of the business probably needs to draw money out of the business in the form of cash out of the bank, for private purposes. He may not be drawing a wage out of his business. He may just draw funds out of the bank account to fund his own living expenses or the expenses of his family. So this is called drawing. So capital or additional capital that you put into the business is money going in. Drawings is money going out, both on behalf of the proprietor of the business. Last week we looked at assets and liabilities, and we looked at the balance sheet. Now, the other couple of terms that we need to look at, which are very different, are revenue, which is the actual or the expected cash inflow that is caused by the sale of goods and services. So that is income coming into the business, that is revenue. And expenses are cash outflows. So expenses are costs that the business incurs in the course of earning revenue. So that would be expenses going out of the business. So revenue would flow into the bank account, causing the bank account to rise if it's cash revenue. Expenses, if it's cash expenses, would cause the bank account to decrease as you pay other people for expenses needed to run your business. So here's some revenue examples. Depending on the type of business that you ran, you could have sales of cricket bats as being revenue, tutoring fees if you're a teacher and you're tutoring other students, selling cafe lattes, interest received if you're a bank, sales of skateboards if you were selling that type of equipment, accounting fees if you're an accountant setting up your own business, Big Macs, etc. It all depends, the revenue depends on the type of business that you're establishing. And if you are looking at selling any of these particular items with the purpose of making a profit, then they are revenue for your business. On the other hand, expenses, so costs incurred or derived in running your business, the costs going out, reducing your bank account. You may have delivery fees for delivering items that you sell, bank fees for running your bank account. If you are selling cricket bats or cricket balls, you need to purchase the stock in before you sell it. So it's an expense. And then you make a profit based on the difference between the selling price of a cricket bat and the purchase price of the cricket bat. There could be electricity for your showroom. You may need to rent an office. You may borrow money, so you're not given that for nothing. There'll be interest associated with the borrowing that is also an expense. You may employ other people. which is wages and salaries, which is an expense of running your business. So all of these would be examples of expenses to your business. So combining it all together, just having a look at different assets, liabilities, expenses, and revenue. They're all these are just an example of different items all mixed up. Wages is an expense. Halfway down, you've got wages there as revenue, or sales as revenue. You've got vehicle as an asset. You've got accounts payable as a liability. These are all where they would end up on the financial reports of a company or an individual. We'll show a little bit later on how the expenses and the revenues find their way to the balance sheet and where they appear in the balance sheet. At the moment, from the balance sheet perspective, you just need to focus on assets, liabilities, and owner's equity. So that's about it for that particular for the accounting terminology for today. Okay, so by now you would have seen that you've received this workbook called Gill's Workbook in your Commerce folder. Now, a little bit of a change in relation to this. When you open it up, it's going to look a little bit different to the one that I'm showing you today because we loaded this up today to your 10 Commerce folder through Hapara. What it's done is looked at and it's converted it to Google Sheets. So you'll be opening it in Google Sheets. Everything will run exactly the same. There'll just be a loss of a little bit of color in a couple of points, which you'll need to take notice of as you come to answer one of the first questions in the worksheet. So if you have a look down the bottom of your particular Gill's workbook, you've got these tabs along the bottom. And at the moment, if you click on contents, you'll open up this particular tab, which looks the same, whether it's on Google Sheets or it's on Excel, which has a list of the special journals and the reports that are actually involved within this worksheet. So the special journals have been coloured in red and the reports have been coloured in yellow. So they're grouped together because the special journals, they contain all of the financial data and they're the place where the financial data is recorded in order to gather totals in order to prepare the information that goes into the financial reports. So the red here for cash receipts, cash payments, credit fees, credit purchases is where all of the data, the financial data is recorded, and then the reports that are generated as a result of the data in those particular journals are the receipts and payments journal or receipts and payments report, cash flow report, income statement report, and balance sheet report. So if you go down and have a look at the tabs down the bottom, so we've got down the bottom here where contents is, we've got a CRJ, we've got a CPJ, we've got CR fees, CR purchases. On the journal, on the Excel that we've got here, they're all in red. I think in your sheets particular package that you've got, they do not have any color on them. So just be aware we've grouped the red and the yellow together, and that just may not appear the same in your particular version once it's uploaded into Google Sheets. Okay, so let's have a brief look at the different types of journals here where the transactions actually get entered. So first off, we're on the tab of the cash receipts journal. So if you go in and have a look at the cash receipts journal, if you have a look here how the cash receipts journal is structured, we have a date column, which is where the cash receipt, the date the cash is received. So this is cash as in money received that goes into your bank. So all these transactions immediately affect the balance of your bank. So we've got the date the transaction occurred, we've got details, which is just so we can track who the money was received from. We've got a reference, so this will be relates back to a receipt of some sort, which you'll get to have a look at tomorrow. So we've got here receipts 1001 or 1001, 1002. They run in order because it's us issuing a receipt to a particular customer, and that logically will happen on our receipt pad, so they will be in order. We then have the amount that we've received. It's either fees that we've received directly. There is an accounts receivable tab there. The accounts receivable tab would be someone who has paid us from an amount that we've recorded previously in our cash receipts journal, in our credit sales journal, which we'll look at later on. So we've got accounts receivable there, but we don't have anything like that at the moment. So there's our fees for cash fees. Any other, so we don't need to have a column for every particular receipt that we receive. Otherwise, the spreadsheet gets too unwieldy. So we just have a column for the most common types of fees, and then we tend to just lump all the others together in another column, and then we trace it back through our details over here in the second column. So the amount we've got here, if we look at the first item on the 3rd of January for Mr. Jones, we've got fees of $60, we've got GST of $6, the amount that's gone into the bank is $66. The most important thing here to know is that GST is money that we collect on behalf of the government. So the rule of thumb is that any fees that we charge, we have to add 10% onto it for the government. So we've got a fee of $60 plus the GST that we collect on behalf of the government. So this is essentially a tax which we've got to pay to the government at some stage. So we don't bank the 60, we bank the 60 plus the $6 for the government equals $66. So that's how our cash receipts journal works. Okay, so here's our cash payments journal. So same as our cash receipts journal. So they are entries that are made into the cash payments journal, but these are entries for amounts going out of our bank account, and they're entered into the cash payments journal if they immediately affect the balance of our bank account. So you'll see the difference here with the cash payments journal. We've still got our date, we've still got our details, we've got a reference of who we're paying. We tend to break down the columns a little bit more than we do in the cash receipts journal because we tend to have a lot of payments going to a lot of different sources. For example, we've got advertising, we're going to have drawings, we're going to have wages, we're going to have payments to people that we buy things from on credit, we're going to have supplies, etc. But the same process, we have an amount for the expense, we have an amount for GST, and then we have the amount that the bank is going down by for this particular transaction. So if we look at the transaction, we say $13.28 less the GST is the expense that's been incurred. So $12.07 plus $1.21 equals $13.28. So the GST will be 10% of $12.07, which is rounded up to $1.21 to give us $13.28. One of the easier ways to work this out in relation to the GST is that if you get an expense which has GST in it and it's all included together, to work out what the GST component is, you divide the total by 11 and that will tell you what the GST amount is. On the side of this particular cash payments journal, there's this good little check GST equation. So if we enter into, for example, a bill of $1,100, press enter, it works out and it tells us the expense is $1,000. The GST within that $1,100 bill is $100. So 1,100 divided by 11 gives us 100. The GST checker has confirmed that the GST included in an $1,100 bill is $100 and the expense is $1,000. So if that was the bill, you would include the $1,000 in the expense column. You would include the GST of $100 in the GST column, and you would include $1,100 being in your bank column. Okay, so the third journal that we've got here is credit fees journal. So this is a journal for the sales that we make to our customers where we have provided the service but they haven't paid us at the time of providing the service. So essentially they are promising to pay us later on. So we give them an invoice, and at some stage in the future they pay us that invoice, and that money then goes into our bank account. So under our credit fees journal, what we have is we have the date, we have the account receivable, who the person is, what the reference is, which will be the invoice number, and the amount that we're charging them. So if it's a fee of $2,000, then the fee would go into fees. There would be GST on that of 10%, being $200. The total amount receivable is the fee plus the GST. The customer who we invoice pays the GST to us, and then we give it to the tax department at some stage in the future. So the fee $2,000 plus GST of $200, the total accounts receivable is $2,200. Now you'll remember in our cash receipts journal, there was a column for accounts receivable. That is our customers paying us the for the amount that they have that they have promised to pay us in the future, even though we've already provided the service. So we've provided the service, given them an invoice. When we've done that, the amount that they owe us has gone in the accounts receivable journal. That's all we need. When they physically pay us the cash, that affects our bank account. It goes in our cash receipts journal. Finally, the last journal is the credit purchases journal. So this is the same as our cash receipts journal. It's just that it's us getting credit from suppliers who we may want to get repairs from. In this particular situation, we've got Mighty Mowers and we've got Right Mower Repairs. So we've gone to those particular suppliers, and in the first one on the 3rd of January, we've gone to Mighty Mowers. We've got a service invoice, so we've got received the invoice from our supplier for a vehicle expense of $250, and there was GST on top of it of $25. So he's given us an invoice which says that we owe him $275, and the normal trading terms would probably be 30 days. So because we're a regular customer, he said, well, you don't have to pay me every time you come in, you pay me once a month, because he's happy to have our business. So we get the invoice, it goes into our credit purchases journal. We know that we owe Mighty Mowers $275 at some stage. When we pay them, the amount will be reflected in our cash payments journal, because when we pay them, it will affect our bank account. Our bank account will go down. So we put under accounts payable, that column in our cash payments journal will be the settlement for us paying Mighty Mowers for the amounts that we received, that we purchased off them on credit earlier in the month. Okay, so I hope that helped you with the introduction into the Excel spreadsheeting and journals. So what you need to do now, if you answer the questions in task 2, so analyse the Excel special journals on Gill's Garden Gurus in the spreadsheet. So in that worksheet, there's 4 questions or so on that. So if you work your way through those, the answers to them would have been contained in my discussion of the journals a little bit earlier in this presentation. Have a look at the spreadsheet and look at the different tabs and how each transaction is recorded. There are different things built into the spreadsheet. For example, it automatically totals some columns and not others, and we can discuss that as we go through. I've said there, if you don't have access to Excel, import the Excel file into Google Sheets. That's actually occurred as a result of us using Hapara to load into your 10 Commerce spreadsheets. So I assume you're all using the Google Sheets now, and the formulas and everything are pretty much the same anyway. So the discussions from now, I'll talk from a Google Sheets point of view. And more importantly, if you've got any trouble, just ask myself or Mrs. Clement. Put a question on the notice board on your particular class pages, or catch up in the Google Hangouts during the lessons. And also keep an eye on those shares. You need to be chatting amongst each other, deciding what you're going to buy, what you're going to sell. I really want to see an update of how your share portfolios are tracking and what your balances are. So now's a real opportune time for investors with stocks going up and down. Anytime they go up or down, there's an opportunity for somebody to make a profit. So there's an opportunity there for you guys to really make a difference with your share portfolios over the coming weeks. So that's it from me for the day. Enjoy playing with the Excel spreadsheet, and I'll talk to you again tomorrow. Bye for now.